Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, I'm going to cover my recent buys into the worst performing stock within the S&P 500. In this video, we'll take a look at the stock, including my own personal position in the company and what I've been buying since I started the position, and we'll also cover some of the details surrounding why it is crashing so hard lately. We'll also take a look at some of the historic stock price performance for the company, as well as some of its most recent performance, and I'll give you guys my thoughts on where I think the stock price is headed from here. To wrap it up, we will take a look at some of the company's financial metrics, and I'll let you guys know whether or not I'm going to continue buying into this company, if I'm going to just hold my position, or if I'm going to sell my position entirely. Now, these types of videos don't always have the most supportive comment section, so if you guys do enjoy this type of content and appreciate the transparency, consider leaving a like. It helps me out a ton. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Now, with that being said, as always, we'll start by taking a look at my portfolio dashboard. So right here, you can see that my total invested is $50,766, and a lot of that came from this year, where I've invested almost $16,000 into the portfolio. Now, my current portfolio value sits at $64,475, which is a total return of 27%, or an unrealized gain of $13,708. Now, if you guys remember from a couple videos ago, this portfolio was actually much lower in terms of value, but since I've added more capital into the portfolio and done more investments, and also the stock market has rallied significantly since Trump announced some of the trade deals he's been closing, we've seen a lot of price appreciation in my holdings. In terms of dividend earned, I've earned $1,684 with dividend income, and my yearly income going forward has finally surpassed the $1,000 mark at $1,040 of yearly income going forward. Now, as you can see right here, I still have 22 different holdings, so I've not added or sold any stocks in the portfolio. I already own the company, which I'll be covering today. Now, without wasting any more time, if you guys didn't already know, which I'm sure basically every single one of you guys watching this video can already tell, the company I'm covering today is UnitedHealth. Now, hopping right into Slick Charts, you can see right here the UnitedHealth Group is ranked 503 out of 503 companies within the S&P 500, so it is in fact the worst performing company year to date. Now, I just want to mention real quick that we do have a lot to get through in this video, but I want to keep it more on the brief side. So if you guys want any more details or you have any questions, leave them down in the comments below. And if you guys want to see a video covering any information that I missed in this video, leave that in the comments below as well, and I'll gladly get to it. Now, going back to this, you can see the UnitedHealth Group was down 42.29% year to date. That's since January basically, and that puts it even ahead of Moderna. A lot of the pharmaceutical companies have had a very hard time this year, but insurance, in this case UnitedHealth Group, has had an even tougher time. Now, I did make a similar video last year on Intel Corporation. It was actually ranked 503 out of 503 at the time, and I had added more to my position and made a video on that as well, where I bought basically the worst performing company in the market. So if you guys want to check that out, I'll pin it right up here. Now, I'll show you guys Intel in a second, but let's just say that that video did not age so well. Intel Corporation actually continued to decline after that video, and by a significant amount. So we'll see what happens with UnitedHealth Group. Perhaps buying more into the company won't end up being the smartest scenario. Now, real quick, just for fun, let's go all the way to the top, and we can see right here the best performing companies in the S&P 500. So NRG Energy is up 76%, and then a very familiar name to most investors, Palantir, is up 71.25%. Now, something that I'm really happy to see is that Uber is up 52.17%, and this is one of my biggest positions in my portfolio, which I started, I believe, either at the end of 2024 or the beginning of 2025. So if you guys want to see my video covering why I was selling Tesla and buying Uber instead, I'll pin that video right up here. Now, this is not a video covering Uber, but I just wanted to mention that I'm very happy with how it's been performing this year so far. So taking a look at Google Finance's chart, we can see right here the company is currently trading at 291.91, but the 52-week low, which just happened like a day or two ago, was at 248.88. Now, we'll take a look at my personal buys as we get further along into the video, but if you guys do remember, I began buying this company around the $500 range. So right now, at least the 52-week low was an over 50% discount to my initial purchase price. Now, as an investor, it does always hurt buying companies at a premium, especially when the discount is so much larger. So year to date, it is down about 42%, but if you look from the peak all the way to the bottom, it's actually down well over 51% because it's calculating the bottom right now as 291.91, whereas the real 52-week low is 248.88. Now, this is mostly unexpected. Most investors, including myself, did not expect the company to dip this hard. I did think that there might be a bit of a pullback in insurance, but not to this extent. In the past month alone, the company's down 35.72%. But as we can see right here, in the past 5 days, the reason I show you guys this is it has dipped down a lot, but when it bottomed out around 255, realistically 244, it has since recovered a decent amount, up 14%. Now the big question is, will this price of 291 hold? Will it continue to increase from here, or is it going to start going back down again in the next couple of weeks? This is most likely going to be a very volatile time for the company, so I will not be surprised if we see more discounts coming in the near future. Now, while we're here, something I want to point out is that the dividend yield is currently 2.88%, and when I was buying the company, the dividend yield was less than 1.5%, so it's basically double the dividend yield because the stock price has dipped down so low. Now, historically, this is one of the highest, if not the highest dividend yields that the company has ever traded at. Looking at the past year, at one point the company was actually doing fine. We can see right here that the peak, it was up 12%, which is nothing significant compared to some of the other stocks in the market. But since then, the recent decline has caused that big pullback in total return. In the past 5 years, the company is now flat basically, which is crazy because if you look again from the beginning all the way to the peak, it nearly doubled. Actually, it over doubled in the past 5 years, but since then it's had a major pullback. Now, one thing that I should point out is that since 1984, the company has actually performed very well. So with the current drop, the company is trading at a price to earnings ratio of 12.22, which is a steep discount to what we saw before. But remember, the price to earnings ratio is based on earnings. And if future earnings do dip down or drop significantly, then the price to earnings ratio right now might not be accurate. Basically, if the earnings got cut by half tomorrow, but the price remained the same, then the price to earnings ratio will become 25. So the PE ratio can be a helpful indicator in some ways, but it can't be the only thing guiding you in making purchasing decisions because it can change very quickly. Now, in terms of what has happened to UnitedHealth, CNN does a pretty good job covering some of the recent events, but we also know some of the major events that happened last year, which I won't be going into detail here. Now, in terms of what has happened recently that sent the stock price spiraling down, the first thing is that the CEO, Andrew Whitty, decided to step down abruptly for personal reasons. Now, a CEO stepping down can be good in some cases. For example, when Starbucks CEO stepped down, the stock did rally because investors did not like the current CEO that was in place. But in this case, the company is doing pretty well, so the CEO randomly stepping down and not explaining much of the reasons to it actually is unpredictable for the company and makes investors hesitant on investing in UnitedHealth. On top of that, UnitedHealth also pulled their financial guidance for 2025, saying that growth will pick back up in 2026, but investors were not expecting that, especially since the company was still aiming for big growth in 2025 that they've since pulled. Now, some companies will use this tactic in order to set up their CEO for success, the new CEO that's taking place of Andrew Whitty, but we're not sure what the reasoning for this might have been here, and it's definitely concerning. Now, for all we know, the company could still post double-digit growth rates, but based on what they've guided, we're unsure right now. And then, as if that wasn't bad enough, the stock price had already declined pretty aggressively by then. The Wall Street Journal dropped the hammer, like CNN mentions, revealing that UnitedHealth is under federal criminal investigation for possible Medicare fraud. And this basically sent the stock down 20% more. Because of this, investors have had a dramatic loss of confidence in the company, and a lot have pulled their money out of the stock. Now, like they mentioned here, the company lost a staggering $288 billion in the span of a month, which is basically half of its value. Now, on a brighter note, in recent days, some company insiders have been buying some of the stock themselves, so that could be hinting at undervaluation here if they do think there's an opportunity to make a lot of money on the company. So hopping back into my spreadsheet and taking a look at my order history tab, I'm going to go right here and I'm going to filter out only for UnitedHealth so we can take a look at the company and my buys by itself. So as you can see right here, I began buying this company on January 18th, 2024, so over a year ago now, and I started buying it at a price of $500 per share. Now, compared to my most recent buy in the company, that is definitely a steep premium to be paying. Right now, I paid $260 for my most recent share in the company. Now, at the time, $500 seemed like a pretty good price to me. The company's earnings were growing quickly, the dividend was growing well, and the company was stable, and it was business as usual. That same month, the company dipped down to $488.80, so I bought one more share, and that same day, it dipped a little more to $480, so I bought another share. Now, each share here is pretty expensive, and at the time I was only using Vanguard as my brokerage, so I can only buy whole share increments, so this was pretty heavy in my portfolio for me. Now, if you guys do want to check out a video on my initial buys, I'll link it up here for my initial purchase into UnitedHealth and my thoughts about the company at the time. Now, 3 months later, I bought another share at $450, and then an entire year went by and I didn't buy any more shares because the company was actually performing pretty well. It had hit a high of about $600 and something per share, which was pretty great. Now, recently the company did begin to dip, so down to $425 where I bought a whole share, and then I've started using Fidelity as part of my brokerage since, so I have some of my holdings in Vanguard still and some in Fidelity. Well, I experiment with Fidelity and see if I want to move my entire account over into there. Now, so far I am liking Fidelity. I was able to buy half share increments. So as I covered in the last video, I bought half a share at $400 and I bought another half a share at about $381.99. It just split it up into two because that's how the trade ended up executing. Then a couple days ago, I bought a share for $335. Then I bought a share for $330. Then I bought a share for $320, and this company just kept dipping down. And at this point, I was already pretty heavy into the company, didn't have much more to invest in it. I like to balance out my portfolio, and I don't like any one holding being too heavy because it opens up a little bit too much risk for me. So then I bought $200 worth at 309.67, and then I waited as the company continued to dip down all the way to 280. I didn't buy there, and then it dipped down to 260 where I decided to buy one more share. Now we'll take a look at my holding in a second, but it's pretty large. It's not the biggest because of the decline we've seen, but in terms of how much I've invested into it, I put a lot of money into this position, and I'm not sure I want to put any more into it unless the stock price dips down even more significantly. So taking a look at my portfolio holdings section, I have them organized from my highest performer to my lowest, and right now Tesla is my best performer, followed by Microsoft, so they both over doubled since I purchased them. Scrolling all the way to the bottom, we can see my poor performance. So we have UnitedHealth here as the worst performing stock in my portfolio, and actually at some point it was Booz Allen Hamilton, which I believe was down even worse than UnitedHealth right now, and that's because I bought it at a pretty steep price as well, but has since had pretty good recovery, and we'll see how it does in its earnings that are coming up, I believe, either next week or the week after that. So right above UnitedHealth, we can see Intel Corporation, and the last time I made a video of this style buying the worst performing stock in the S&P 500, it was Intel, and as you can see, it has not done well since then. I believe at the time I bought it for about $27 per share, and even right now it's still trading at $21.66, so some pretty poor performance even as I've averaged down my price. We will have to see if UnitedHealth suffers the same fate. If a year from now I'm still deeply in the negative or even worse than I am now, then this will be another fail. But if a year from now we're in the positive by a significant margin, this will be a pretty good buy. Now the stock doesn't have to correct itself within a year. It's the same reason I'm still holding on to Intel. I do believe in the turnaround for Intel, and I do believe in the turnaround for UnitedHealth, which is why I purchased more of both companies. Now filtering out all the companies and exclusively taking a look at UnitedHealth, we can see that my average price paid was $401.81, but as you guys remember, my initial price was $500 per share, and I've averaged it down a decent amount, trying to bring it down as much as I can. Now, unfortunately, the current price is $291.91, which is a significant discount, and that puts me, if I scroll here to the right, at about 26.74% in losses, or about $1,253. Now, in total, I purchased 11.668 shares, and with dividend reinvestments, I have 11.766 shares, and my amount invested was $4,688, which actually puts it even above the amount I invested into Booz Allen Hamilton. Now the current value is sitting a decent chunk less than that at $3,434, which puts my allocation in the company at about 5.3%, as you can see right here. Now I'm comfortable having this a 5% holding, but I have to keep in mind that I actually put $4,000 into the holding, and so that is technically a much larger allocation of my capital than some of my other positions. In total, I have earned $49.91 of dividend income, and my yearly dividend for each of the shares is $8.40, which gives me an annual payout of almost $100 for the total position. Now, the current yield is at 2.88%. I bought it closer to a 1.5% yield on cost, but since I have averaged down my holding, my yield on cost is at 2.09%. Now I'll tell you guys some of my thoughts about this holding right now instead of waiting until the end of the video. So basically, I am going to continue holding my shares in UnitedHealth for now as long as fundamentals don't change too significantly. Now, even though they did pull their guidance last quarter, if they are able to continue growing their earnings per share pretty well, even if it's not as fast as what they first anticipated or what they guided for originally, the company should still be pretty undervalued right now. Now, if the fundamentals do begin to deteriorate, I'll have to come back and reevaluate my holding in the company and see whether or not I'm willing to sell the position at a loss. At this point, because of the size of my position, it is very unlikely that I'll add any more shares on top of what I already just recently bought, but if the stock price continues to dip down significantly and fundamentals remain strong, I may decide to just add a little bit more into the position because I do think that it's currently a pretty good buying opportunity for myself. Now, if I didn't already have a position that I started at $500 per share, I would definitely be buying like crazy at the $280 amount for my portfolio because I think UnitedHealth long term has a pretty good runway for growth, and I think it's going to have pretty good dividend growth as well. Now, it is unfortunate that I started my position at such a high premium. I wish I could have began my position at $260 per share, but of course hindsight is 2020. So real quick, we can take a look at my MyPie section. So my portfolio is at $64,475. I have $8,100 in cash, which is about 11.2% cash. Now these are my breakdowns, my target for each of my sections, 50, 40, 10, and this is my current, which is a little bit off because I have a larger holding in Divine Dividends and miscellaneous than I'd like to. Now I do continuously add to this position right here every week to both my VOO and SCHD holdings, but there's just been more buying opportunities in these individual stocks, which is why it's so skewed right now. Now UnitedHealth does fall under my Divine Dividends section until they decide to either pause or cut their dividend. If that happens, they'll have to unfortunately go into the miscellaneous section because they're not as consistent as the Divine Dividend stocks that I hold here. So right now it makes 5.3%, which you can see puts it above S&P Global and above Texas Instruments, but I believe it does put it below Google at 9% and Booz Allen Hamilton at 6.4%. Now, if the company were to climb back up even to $400 per share, then it would be a larger position than my Booz Allen Hamilton position as it currently stands. In case you're wondering about the colors, red does mean it's on the chopping block, companies that I'm looking to sell, and yellow means that I'm still debating whether or not I hold them in the portfolio or I'm going to sell them. Now, one thing that I want to show you guys on Seeking Alpha is the dividend yield over the past 5 years. So it's historically traded below a 1.5% dividend yield or right around 1.5%. But because of the recent price action, it does trade at a 2.88% dividend yield, which could show signs of undervaluation. Using dividend yield theory alone, you could argue that since it's sitting significantly over the average dividend yield over the past 5 years, then the company might be undervalued. Now, keep in mind, there's many metrics you have to consider when deciding whether or not a company may be undervalued, and this is just one aspect of it that might be worth taking a look at. Now, if we take a look at the company's dividend scorecard, we can see right here the payout ratio is currently at 30.04%, and if it remains that way, this is a pretty safe and consistent dividend. The 5-year growth rate is at 14.22%. UnitedHealth tends to give some pretty strong dividend increases every single year for the past 15 years. Now, depending on your investment style and your portfolio, this could be a great opportunity to pick up a very strong dividend growth compounding machine at a steep discount. Now, in terms of price to earnings ratio alone, the company is looking pretty cheap compared to its 5-year average, which is sitting in the 20s, so it's almost a 50% discount to that. Now, in terms of revenue growth, this is one of the more important metrics to decide whether or not the company might be overvalued. The year over year, it grew 8%, but forward looking, it's expected to grow 9%. Now, if the company is not able to hit these numbers and this drops down to, let's say, 0%, then its valuation will change drastically. Now, if they're able to hold these values, which is close to their 5-year average, then there's a good chance that the company will spring back pretty aggressively and the stock price might increase pretty quickly. One thing I would be concerned about is margins. Insurance companies, especially the medical insurance companies, have very low margins, and compared to its peers, UnitedHealth actually has higher margins than some of its other competitors. Now, the reason that I mention that is that their elevated margins could, of course, get compressed even further down to 1 or 2% like some of their competitors, and that would cause their earnings to go down drastically. So just to summarize and give you guys a straightforward answer, in my opinion, for my personal position in UnitedHealth, I'm going to continue holding this position, and I did add more into the position pretty recently at those discounted prices. Now, if I didn't already have a holding in UnitedHealth, I would have definitely opened one up at these prices. I think it's a great opportunity for my portfolio and it would make a great addition to the portfolio. Now, because I already have a holding, I'm going to continue holding on to mine at least till the next earnings report to see how they're performing. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at UnitedHealth and seeing my individual position in it and what I'm doing with my position going forward. If you did make it this far into the video, let me know down below whether or not you guys are buying UnitedHealth. I'd love to know. If you haven't yet watched last week's video where I cover my dividend income for the month of April, check out this video right here. And if you want to see the video before that where I talked about realty income and whether or not it's still a buying opportunity at these prices, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.